Well, still talking about real estate now. PwC estimates that Nigeria holds at least between 300 to $900 billion worth of debt capital in residential real estate and agricultural land alone. Now, this is in the face of a deficit of 22 million when it comes to housing. Is there a way to unlock this debt capital? We have the chief economist at PwC Nigeria, Andrew Nevin, joining us now for this conversation. Good morning, Mr. Nevin. Thank you so much for joining us.
Good morning, Edie. It's lovely to be here.
Yeah. So tell us about these findings by PwC. You talk about between 300 to 900 billion dollars in debt capital. What's this about, and where are the debt capitals?
Well, I mean, when we release this report a few years ago, we were really looking at the fact that Nigeria is a wealthy country. So people keep repeating, wealthy, Nigeria is poor, Nigeria is poor. We just didn't agree. It's wealthy, but the problem is we have assets that don't produce a return. And a lot of those assets are in real estate, as you say. It's not easy to transact real estate. It's not easy to then monetize it. If you want to sell a piece of land and go open a business, then it's not a simple transaction. So it's tying up all this capital in dead capital. And of course, real estate's the largest capital asset. It's at least 3 to 4 times the size of GDP. So if official GDP is 500 billion, and I'm sure the real GDP is probably closer to 700 billion, there's $2 trillion worth of US dollars worth of real estate, and it's tied up in dead capital. But we have other things that are dead capital. I mean, we have mining resources that we're not able to exploit yet. We have resources like the Ajakuta steel. We have the 3 refineries that suck up a lot of resources from the federal government but don't produce any refined petroleum product. We have the National Stadium, the National Theater. So we're a very wealthy country, but we're not getting a return on these assets.
So the report also says that there's the issue of uncertainty of ownership, which has decreased the value of assets, and then the ability to lend or borrow against it. And these loss forms are also debt capital. What do you think, can be done? I mean, when you mentioned the National Stadium, those are like, really big deals. But when we look at it as in what can be done by individuals, maybe down here by state governments to unlock this debt capital, how do you see this being resolved?
Well, I think it's already happening. I mean, we put out the paper, I think it was 2019 or maybe even 2018. We lose track of time with COVID. But you hear about people talking at every level of government about the concept of dead capital. And you take, for example, you mentioned state governments. I mean, we're very big on development driven at the state level. Kaduna started several years ago working on mapping its real estate, knowing who owns what, and then introducing a tax to be able to raise tax revenue. And so they're in effect unlocking this dead asset. The National Theater, I mean, we know it has tremendous potential. So the CBN took the lead in creating a transaction to be able to, involving many of the banks here, to renovate and rebuild it. And of course, there's some housing components, but also some arts components. It becomes an arts center for the nation. So, and the Minister of Finance, Budget and National Planning, she often talks about unlocking dead assets. And every state governor that I've listened to recently is really recognizing that they have tremendous assets and how to unlock them. So I think, I mean, I hope our paper played a small role in this. I think it's now widely understood that we need to unlock these dead assets, and we're seeing real progress. And I think that, like anything, the progress at the beginning looks slow, but it's really gathering momentum. And if I look particularly in the real estate industry, when we wrote the paper, there wasn't much activity in the real estate industry, but all the issues that we understand need to be solved. So the mortgage issue, the Land Use Act, all of that, people are working on them. And we're actually seeing a lot more activity in the real estate sector than we saw a few years ago. So I think the country is unlocking the dead assets. And it's really great. It's great to see it. I think, again, it needs to happen in every state. So it's not something just for the federal government. Individual governors need to be pushing for it, but it's happening.
Yeah, so what I hear you say is that a lot of this is connected to, the process of, for instance, obtaining CFO, the bureaucracy, the paperwork to legalize some of these assets. Is that what I hear you say?
Yeah, no, absolutely. I mean, you think about real estate transactions. I mean, you need to know who owns a piece of land. And obviously, there's some land that will still be subject, at least in my personal view, to communal ownership and traditional ownership. But there's other land that needs to be under kind of a more modern system of ownership, and where it's clear who owns the land, it isn't contested, you're able to easily transfer it. I mean, one of the things that we've advocated for a long time is we'd like to see the land registry put on the blockchain, use that distributed ledger technology to really give certainty to it. And I think there'll be some states that are moving towards that. But that helps a lot. And then, of course, once there's much more certainty around the ownership of the land and the ability to transfer it, then it becomes a living asset, no longer a dead asset. You can borrow against it. You can easily sell it to do something else with the capital. And we'll just have a much more dynamic economy. And of course, we know there's a housing deficit, and it'll help the whole real estate sector grow to be able to fill that housing deficit.
You know, when you talk about land and such landed assets, especially when you go to maybe the rural areas, you have a lot of family titles that are not formal. You know, that you can actually present in paper. And so maybe when you talk about unlocking it or using it for financial transactions, it becomes maybe a challenge. How do you see issues like this being handled? You know, when you get to lands or assets that do not have official records with the government or official records where somebody can work with?
Well, I think the rural land issue and the urban land issue are a little bit different. And I actually think the country should focus for the moment on the urban land issue, where land is more valuable. I mean, rural land, we actually know there's a lot of land in this country that is cultivable, but not under cultivation. I don't think it's an urgent issue necessarily in rural areas to solve this problem. The value of land, of course, is much higher per hectare in an urban area. So I think we should concentrate on this, on at least the next 5 years, on the states. So I said Kaduna and even Lagos, of course, got a long way in kind of ascertaining who owns what land, being able to kind of streamline the COE process. So I would focus on that right now. I really wouldn't worry from a policy perspective on trying to fix this issue or address this issue at the rural areas for the moment.
And then talking about the urban areas, you have a lot of unoccupied apartments, and yet we have this 22 or even more deficit in housing. How do we balance this? If you go to, for instance, the island part of Lagos State, you see a lot of apartments that are not occupied, and yet we still have housing deficit. How do we balance the two scenarios?
Well, I mean, I think the reason we have unoccupied apartments in Ikoyi, so Ikoyi is the most valuable real estate in Nigeria, the most valuable real estate in Lagos, probably perhaps in Africa, and yet you have unoccupied apartments. Why is this happening? I mean, one of the reasons it's happening is because a lot of money that is, let's call dark money or diverted funds, are used to buy real estate, and then they're not, the perpetrators of this are not necessarily under pressure to try to make this that well known. They don't necessarily have to have tenants on that, but it's also a reflection of the fact that we have a very uneven distribution of income. So if you're one of the few Nigerians that are very wealthy, you can buy 10 apartments in Ikoyi. You don't need to occupy them. So both of those issues need to be addressed to do this. They're in a sense collateral damage of these other two issues on there. So I mean, to the extent that we're able to kind of close down the ability to divert public sector funds, they're not going to go into real estate in Ikoyi. In the sense that we're able to kind of get an income distribution that's more even, then there won't be so many people that can then buy 10 apartments and leave them empty. Because what you want, of course, is you want a vibrant housing market, both to sell apartments and houses and to rent them, that works with the market. And if they're empty in a normally functioning market system, if there were empty apartments, the rent would drop because the people that own the apartments want a return on it. But that's not quite working right now. But I'd start with the diversion issue. We have a lot of dark money in this country that owns that sort of real estate that's vacant.
So we see that Lagos State government is making an effort to regulate transactions, you know, in the real estate space. Of course, that's for the state. They signed a bill and to regulate some of the transactions to protect. We know that there's the monthly payment of rent that's coming up in Abuja, and now we have Lagos State. So it seems like the government is now really conscious of the fact that we can actually deal with this deficit, but mostly through rent. But what else do you think the government can put in place? Because even when we hear of low-income housing, a lot of people cannot afford it. And then when you talk to the people in the real estate industry, they tell you it's a cost of construction. So what do you think can be done, you know, to get the low-income housing, for instance, and these efforts of government, both the state and at the federal level, to really bear the fruit that is needed?
Well, we've said for a long time that real estate's the most important sector to drive unemployment and alleviate poverty in the country. I mean, everyone needs a place to live. And when you develop particularly residential real estate, it drives employment. You need plumbers, you need masons, you need electricians, you need laborers. And of course, you then have the building supply companies who are supplying materials for kind of low and middle income housing. They're not importing these materials. That's driving employment here. And of course, if someone buys a home, they want to furnish it over time, and that will drive employment as well. So it's really critical to get it right. But I mean, the reason for the high cost of low and middle income housing is the same reason we have the high cost of everything, because we have a difficult infrastructure, we have too much complexity in the system. So all of these ease of doing business issues, if we continue to work on them and make progress, we're going to also have the benefit in the housing. Now, that said, there's actually a lot more housing activity, building activity, apartment building activity around the country, and is captured in the official statistics. So the NBS, the past few years, you've seen the real estate sector performing quite poorly in the official statistics. But the reality is, if you go around, you're going to find so many projects going up, offers of housing. Of course, some of it's a little bit difficult because sometimes the developer doesn't deliver on what they say, and that's created another problem. But I wouldn't necessarily, we should have programs around mortgages. We should continue to work on issues around the COE and the Land Use Act to make it better. That's not going to solve the housing deficit on its own. We also need to just have the general ease of doing business that will help bring the prices down for this kind of low and middle income housing. And the other thing I think that's very important is housing is a very local issue, and it really needs to be driven at the state and even at the municipal level, and the way it's done. And of course, from a state or municipal level, it's really valuable to get the housing sector right, because it's definitely the source of IGR that's the most easily attainable and most easily measurable. If you know who owns a piece of property, you're able to tax that piece of property. If the person can't afford the tax, but it's easily saleable, they can sell it and move to somewhere less expensive. So at a state level, these things all need to come together. But as I say, I've seen, actually, for 5-6 years, I've been talking about the real estate industry, and we've really seen, despite COVID in the last 18 months, the real estate industry start to move. So it shows you the enormous pent-up demand that we have for real estate on that. And if we could just get some ease of doing business progress to help bring some of the costs down, it's going to accelerate.
Yeah, and one of the things you mentioned is mortgage, and it seems it's catching up, but not as popular as when you talk about the Western world.
Yeah, I mean, that's difficult. We have high interest rates. So I had a mortgage. I owned, when I lived in Lagos, I lived in Lucky, and I owned my own property, and I had a mortgage. It was 5 years, and it's very difficult for the average Nigerian to pay off in 5 years. So we need a general reduction in interest rates. I mean, I hope to single digits, but no more than 10 or 11% at least, that brings that down. And we need to extend the tenure of mortgages. 5 years is too short. I mean, it may not be feasible in our environment to have a 25-year mortgage, but certainly I think we could get to 10 or 15-year mortgages. We're on the way to that. So if we had a 10 or 15-year mortgage, some improved ease of doing business, easier titling and transfer and COE procedures, I think those things will all come together to make continue to kind of push a vibrant housing market. But as I said, I mean, I've really seen, since the time we started to focus on this at PwC 5 years ago, 6 years ago, we really start to see progress in all the issues that I have discussed today. When I discussed 5 or 6 years ago, were not really being talked about and worked on in the country. Now they're all being worked on. I see it at the state level. I see it at the federal government level here in Abuja. So I don't say a lot more confident, but I'm confident now that we're really going to make progress on it. And I said, the demand for housing is so great. People want to own their own house. They want their own property. They want to pay it off. They want to be able to furnish it in the way they want. They don't want to be subject to a landlord. So those demand factors are already there. And if we can just improve some of the supply factors, the sector will continue to grow. But it really has made huge progress in the last 3 years.
And well, we have a lot of private sector participation, at least when we look around at some of the things that real estate stakeholders are doing. Would we say that they are doing enough? Well, I'm talking of private sector participation, because they also come with this high cost that we are talking about.
Well, I don't think housing is something that, for the most part, can be built by the public sector. I mean, there may be select public sector projects. There may be some low-income projects. I know they're going in some different states. There may be some housing that's built for civil servants, and there's nothing wrong with that. But at least 90% of housing is going to be built by the private sector. As I said, I mean, I think the sector needs to be regulated in the sense that developers shouldn't be able to take upfront funds and then not deliver on what they say. But I mean, this issue, every country in the world faces exactly the same issues. So India, Brazil, Indonesia, countries that are similar to our situation. Many of them, they've worked through it. I mean, if you go to India 20 years ago, I think they were in a similar situation to Nigeria, where titling was difficult, construction was expensive, permitting was difficult, mortgages were non-existent. You know, they've moved on now. You have a very vibrant housing sector. People are getting new houses. You have to have a secondary market for houses there. So they've worked all through those issues. You know, we'll work through those issues as well, and I think in an accelerated time. But I mean, I don't think the solution is to ask the public sector to build the bulk of the houses. As I said, maybe they can build up about 20% of 10% of the housing. But beyond that, the private sector is going to be the one who's building the houses. And in every successful economy, the private sector leads the real estate sector.
All right, thank you so much, Andrew Nevin, Chief Economist at PwC Nigeria, for sharing your thoughts on how we can unlock the debt capital in the real estate sector. Thank you so much. Enjoy the rest of your day.
Thank you, Amy.
We'll take a break now. When we come back, we'll head straight to the commodities market update. Do stay with us. It's Business Morning on Channels Television.